Thanks for having me here today. Today I'm going to talk about disruption and particularly Proptech. And the reason I think I've been asked to speak is that I work for the biggest digital real estate company in the world. So for those of you unfamiliar with REA Group, you've probably heard of realestate.com.au. That's our main site here in Australia. But we own portals throughout the world. So we own portals throughout Asia. We own a share of a portal in the US called Realtor.com, a share of PropTiger in India. And we've grown to become, not only are we Australia's first PropTech company, but we've grown to become the biggest digital real estate company in the world. So we're now a $10 billion listed company with significant holdings across not just real estate, not just residential real estate, but also broking. We own a company called Smartline. We've gone into home loans. We've just purchased a company called HomeTrack, and they're kind of like a CoreLogic, providing automatic valuations. So we have grown into a very, very large company. It hasn't been an easy road. We started in 1995 and we started in Australia's technology hub of East Doncaster in a garage. A couple of guys were very active. You know, they saw the internet as a really big opportunity. They were purchasing up hundreds and hundreds of domain names at that time. But the one that was really successful for them was realestate.com.au. So they started the company. I've got some imagery of how it looked initially. It was very clunky. They started pasting up ads. You can imagine trying to download a lot of property photos with dial-up. It was a pretty time-consuming process. But they then grew the company. They listed in 1999, so the share price was 1 cent at that time. It wasn't a very successful listing. I spoke to a broker recently, and he purchased some shares back in 1999 at 1 cent, and they doubled to 2 cents, and he thought he'd really cleaned up, but now the shares are worth around $70 to $80, so he really wishes he'd held. So 1999, we started, we had News Corp purchase a majority share of us, so a 60% majority share. We then started moving globally and then started moving into things like lifestyle and lots of other adjacencies. So I guess the main thing from this is that we're a disruptor. We certainly disrupted print, with what happened with print as a result of advertising moving from print to online. It had a huge impact on companies like News Corp and Fairfax. But we are also a company that is very, very paranoid about disruption. So we look very closely at what our landscape is looking like, and I'm going to run you through some data and some slides that our strategy team has given me, but also around some of the way that I use property technology and information in what I do. So we invest heavily in innovation. I mean, I could go through all the things that we do. We've got a chief inventor. We like using the title chief in our organisation. There seems to be a lot of us. We have a lab. So, if you're in Melbourne and you want to have a look at our lab, Nigel's a great guy to really take you around and show you some of the things that we're doing. We also have hack days. We've called them REAIO, which I can never remember, so I keep calling them hack days. But internally, we invest a lot in innovation as well because, again, when I started with REA not even 3 years ago, and at that time, we really had one competitor, and that was Domain. And Domain had an economist, REA wanted an economist, so I was hired. But now it's changed so rapidly, and it's we worry about Domain. Obviously, we watch them very, very closely, and we look to see what they're doing. But we're 5 times bigger than Domain, and now the types of companies that we're looking at are rapidly different. So in terms of how massive it is at the moment, you can see here. These are all the emerging portals that are coming up around the world. So, we consider realestate.com.au, that's a portal, you can buy and sell. But there's lots and lots of different ones. There's buy-focused ones, there's rent-focused ones, there's do-it-yourself, ones that you can just put your own details up there. There's tech-enabled ones. Rent tech has grown dramatically. So again, this is something that nobody really was considering 2 years ago, but since then it has increased dramatically. And this has been a big focus for us this year. You know, when we look at our strategic objectives as to what we're looking to grow, rent is something that we consider very, very important in terms of an opportunity for us, but also an opportunity within the ecosystem that, you know, a lot of people haven't been touching it for quite some time. There's a lot of agent tech, you know, things like rate my agent, you know, those sorts of things. Concierge and leads, you know, so technology that's promising leads to agents. Ultimately, what agents want is leads, and they want listings. So anything that can kind of help with that process becomes really important. Marketing automation, digital contracts. You know, even, you know, not many of us are putting together paper contracts anymore. A lot of it's been done digitally with regards to property. The homeowner, you know, there's so many things around the homeowner and what they can do with tech. So, you know, finding a tradesman, developers, you know, are starting to look at ways that they can show housing styles more readily as well. So there's a lot of things that people can do directly now that they weren't able to do before. And then finance and investment. So I sit on an advisory panel for BrickX. They're a fractional investor in property. Domacom is an example of a crowdsourcing investor in property, and those sorts of groups are growing. Insurance, Chris talked about blockchain before. Digital home loans, you know, we're probably not going to see so much dominance of the big four in the home loan space because of all these digital home loan groups that are emerging. In terms of our strategy team, these are the areas that they consider to be the biggest growth over the next 12 months. So instant offers, you know, this is something that is growing in the US. Zillow, our major competitor over in the US, is now doing instant offers. So, you know, they'll give you not what you want for a home, what they want to pay you for your home. And what they do is that they then buy the home and then they, you know, either do it up a bit or they flip it on, but, you know, they provide a very easy way for people to sell homes. You know, at the moment, if you want to sell your home, you've got to employ an agent, you've got to go through this quite long-winded process. Zillow are basically offering the same service that is quite common in the US, that you can drive your car up, you can sell it and go. You'll be able to, or you can now do that in the US with your home. Concierge leads, I talked a little bit about that. Rate My Agent is a big one. A lot of problems with this. You know, we know Rate My Agent. If you're an agent and you pay them money, you will get rated higher because they'll make sure that you do. But, you know, there's a lot of, you know, I think we've got a session on, we do have a session on ethics a little bit later on, but, you know, there's lots of things that are going on because this industry is not heavily regulated at the moment, and so people are really pushing the boundaries. E-conveyancing, e-settlements, PEXA, you know, that has come up in the news a lot recently with that incident of someone's deposit going missing. So there can be a lot of challenges with losing money with tech because of how quickly it moves. And then rental tech I mentioned before, and particularly a lot of focus around bond payments and how renters potentially will no longer have to pay bonds because of the way tech is really developing. The property landscape, this is something that was put together by our chief inventor, and you can see there on the left-hand side, that was us in 1995, a really attractive yellow, looking a little bit McDonald's-like. And we've kind of moved through, you know, a 20-year time period where we have had to change and adjust to how the landscape's changing. And really a lot around data. You know, data is just so important now. And Chris also spoke about you know, data. You know, that you can have tons of data on one hand, but the ability to analyse that data is really the biggest challenge at the moment. We're very free in terms of sharing our data, so, you know, we do have universities approach us to use our data, and we're fine for that, but our biggest challenge is resourcing people to pull that data out. And that's really the challenge that we're facing at the moment in our ability to be able to share the data that we collect. So the view, you know, his view is that we are moving from more of a search. You know, back in 1995, even now, if you're wanting to buy a house or you're wanting to rent property. You really go on, you push yourself online, you look for something, and it's quite a deliberate process. We are now moving towards more of a matching process that, in the same way that many of you may have got your most recent job on LinkedIn, I think a lot of people now, if you're on LinkedIn, you're getting jobs pushed to you to say, I know you're not looking for a job, but this is one that you might want to consider. That's probably the way of the future with housing, that, you may be renting, but you'll get a message to say, hey, we know you're renting, you're paying $400 a week. If you pay $50 more, you could buy this house. And it may be a developer showing you the house, it may be us showing you a house. Then the home loan people step in, this is the amount you'll pay on your home loan, and there'll be a lot more information pushed at you to enable you to make a decision as to where you want to go. So the information that I use, we talk about data a lot, and we have an enormous amount of data. So we own home tracks, so obviously we've got all the pricing data that everyone has access to. We have all that clearance rate data, we have all that time on market. We've got 95% of listings, so we've got information on every single, nearly every single listing in Australia. But probably the data that I like, the data that I like the best is really looking at the search behaviour of people on our site. And we have around 7 million searches per day, so that gives us billions of searches over a 12-month time period. And since I've been at REA, it's been fascinating to look at some of the things that we're seeing. So, we can see quite clearly that, when there's difficulties in getting finance or interest rates increase, we do see a drawback of activity on our site. We can also see things like, we can also see searches from overseas, that when Trump was elected, we saw this massive increase in search activity coming out of California, looking at Sydney. We get some information from Realtor.com, so our US site, about Australian search behaviour. And what was really interesting there is that when they look at where Australians are searching, the number one destination that Australians search is Hawaii, and they see 7 times as many Australians searching for property in Hawaii than they see Americans searching for property in Hawaii. So, it shows, I think it partly shows that a lot of us are going to Hawaii on those cheap Jetstar flights, but also how property obsessed we are, that we go overseas on a holiday and we can't help ourselves but download an app and see what we could get for our money. Some of the things that we've also seen that was really interesting, particularly being here in Hobart, is we saw very early on that how many people were pouring in terms of, not pouring, but were looking to buy in Hobart before prices started moving. So when I started, we had a look at, we look a lot at search per listings over time, and when I had a look at search per listings, when I started, I saw this massive change in Hobart. And at the time, we weren't seeing much change in pricing in Hobart, so I wasn't quite sure what was happening with speculation. So I kind of tentatively came out and said Hobart was probably going to boom, and since then, obviously, it has seen incredible price growth. And so that, I guess that was one instance. But, and now, we're seeing things like Geelong. We're seeing Geelong really outperforming in terms of views per listing. We're seeing low-income Adelaide suburbs doing very, very well on our site in terms of views per listing. So we do see lots of interesting things with regards to behaviour, and then it does frequently, and actually I haven't seen an instance where it hasn't, it does lead generally to either price increases or rental increases or some change in the market that the behaviour of people on our site is predicting. So I'll run through some of those factors that we're seeing. I guess that in terms of the types of places that we see very strong demand, typically good retail, good schools, good public transport are the 3 factors that people seem to be more engaged with on our site. Beaches are really popular. We do find high views per listing for beachside suburbs. We're not in Melbourne and Hobart. I'm from Melbourne originally, so I understand that. Renters are different though. They also look for good retail. They are very focused, so more on entertainment. So not surprising given that the majority of people renting are located under 35. Keyword searches provide some really interesting insights into people's behaviour. In pretty much across Australia, we see granny flat as one of the top search terms. We don't see it in Melbourne, so I don't know why Melburnians don't look for granny flash, but they don't. Here in Tasmania, church is a really popular search term. So whether people want to live in churches or live in a church or be near a church, I'm not sure. And then Sydney, we see this really strong focus for water, so water view, pool, beach. About 7 of the top 10 search terms are really showing up how much we love water. So we kind of have all these national characteristics that hold true, but then as we start to dig a little bit deeper, we start to see some of the factors that really drive housing choice depending on which city that you're living in. Renters is something that I mentioned before that we are focusing a lot on at the moment, and when we look at some of the things that renters, we've done a lot of work around renters. I'm just giving you a bit of a snapshot in terms of some of the more interesting things, but when we look at the top keyword searches, we can see things related to comfort. Pets is the number one. Not surprising that Victoria has really changed their legislation, focused a lot on pets, because we can see for renters how important that is. NRAS is a very, very popular search term, and so much so I do a regular spot on your money, and when we look at the top, the most viewed property every week for rental properties, it's always an NRAS property. So we can see the popularity of that scheme for people that are looking to get into the rental market. And then air conditioning, not surprising, and there's a lot of comfort elements that renters are looking for. We still find the family home is a preference. So when we look at views per listing, the average family home is 3 bedrooms in Australia, but everyone's aspirational. They want 4 bedrooms. They want 2 bath, 2 car. They want a big block. So, even though we are moving more to living in apartments and living in high densities, we still aspire to live in a big home, in a big block. The thing, though, that really is the factor that is changing our preferences is affordability, and the price point that people want to pay is generally around $650,000 to $700,000. So, no one wants a big mortgage, but it does, and that really does change our behaviour. It's quite interesting too, looking at behaviour. When we look at, say, searches from China, we see about 1,000 searches from China every single day. Chinese investors are majority looking at that $650,000 to $700,000 price point as well. So, it's a really crowded price point that we're seeing across Australia. International property seekers, we can see that if you're looking out of Asia, you're looking at our university suburbs, Carlton, Clayton, the top 2 searches for people out of Singapore, Hong Kong, China. St Lucia in Brisbane is a really popular location. If you're looking anywhere else, if you're looking from anywhere outside of Asia, you're very much looking at kind of brand name suburbs in Australia. So people from the UK love Manly, the Irish love Bondi, and New Zealanders love Coolangatta. So there's some really distinct preferences. And I think what's interesting is that, it's kind of interesting that they're looking, but then when you start to look at these locations, you can start to see that a lot of these people, not necessarily the people searching, but we do see a lot of high proportions of people born in the UK in places like Manly. St Ives is the number 1 for South Africans searching our site, and St Ives has the highest proportion of South Africans in Australia. So there's a lot of word of mouth elements and also a lot of settlement that seems to take place. At the moment, these are our most in-demand suburbs for buyers. So when we talk about most in-demand, we talk about views per listing. And to give you an idea how much views per listing differs across Australia, all these suburbs see around 12 to 14,000 views per listing. To give you an idea of an unpopular suburb, they see around 250 views per listing. So an unpopular suburb is Berrima in Darwin, so home of the Darwin Prison and Dondale Correctional Facility. No one wants to live near a prison. Another very low views per listing is Sydney Olympic Park. So, not so much because there's a prison there, but because there is just so many listings in that location, and on a views per listing basis, we see very few views per listing. So these are the most in demand in Australia for buyers. When we look at renters, we are starting to see a few Adelaide suburb. We are seeing an Adelaide suburb topping the list. Adelaide's been an interesting market for us at the moment. That Hobart has been a runaway success on our site in terms of the amount of search activity taking place. Adelaide does seem to be seeing is starting to pop up in quite a few lists at the moment. So not just buyer demand, but also rental demand. So there does seem to be jobs growth occurring that is really pushing renters to the area. So that's our data. I guess in terms of affordable and social housing, in terms of how Proptech can help, I know AHURI are doing a lot of research into this and some really interesting reports that have come out. But in terms of how some of the things that we were talking about at work were things around understanding supply and demand of affordable housing. It was interesting. I was talking to Michael and a few others recently about the availability of data of government-owned housing. That the best available source is the census, which is self-reported. We don't really have a really good clearinghouse of information to truly understand how much government housing is out there. So then trying to move it to affordable housing, it's very difficult if you don't have good data. Reduction or elimination of rental bonds is really important. That can be a really big problem for people that are wanting to move home, because if they move, it can take a while to get the rental bond back. They need to stump up quite a lot of money to be able to pay for the rental bond. And then there's things around construction and lower cost construction. So one of the things that was really interesting, which I'll just play a quick video on, was seeing how Amazon is now moving into the prefab space. So we watch Amazon really closely because we don't know what the hell they're going to do next, so we're a little bit paranoid. But they're very cashed up, they're very strategic, and they look very long term. So this was quite an interesting one. I hope the video works, but this was a really interesting one to see what
Amazon is going beyond smart home devices, taking a stake in a startup that actually builds homes. Amazon's Alexa Fund invested in Plant Prefab. That's a Southern California company that uses sustainable materials to build prefabricated single and multifamily houses. It plans to use automation to build homes faster and bring down costs. The Alexa Fund has typically backed startups focused on voice technology, but this investment comes less than a week after Amazon just launched more than a dozen Alexa-powered smart home devices, including a microwave. So put these two together and you kind of see where Amazon is headed.
So I don't really think much of Alexa. I can't really see much of purpose for that in my life, but certainly I can see a lot of interest in what they're doing if they really get that prefab situation sorted. When Proptech goes bad, we know that it can lead to a few problems. I know we're going to be talking in a lot of detail this afternoon about Airbnb, and I'm really interested to hear what the outcomes are from the AHURI research on that. Reputation risk is another one. There are groups that have come out with tenant rating apps, and tenant rating apps can be very problematic. If you rate a restaurant badly, and fewer people go to that restaurant, that's a problem for that restaurant owner. But if you're a tenant and you get a bad rating, you could be locked out of the housing market, and that's a massive issue, particularly for people who do, not for people that rely on rental housing, but for everyone, because we all do need housing. And then there's things around quick money that, things like Open Door, the things that Zillow are doing, could potentially lead to people, really taking up that advantage to get a big lump sum at their own detriment, and so I think that's another one that will have to be more highly regulated over time. So thank you for having me.
Thank you, Nerida. That was a fascinating insight into Proptech, its history and future, and some of the current developments. We do have use for Alexa in my home. It's used for the kids to do Battle of the Band to decide what music's going to play next. It's infuriating. We have time for a couple of questions before the morning tea break. We have one to the side here.
Hi, I'm Nerida. Great and fascinating presentation as always. My name's Karen Smith and I'm from Lancome, and I'm asking a question on a personal note, not from Lancome, but I'm about to rent out a house, and you mentioned a couple of times the reduction or the elimination of a bond. So can you expand on what that actually means and why that is being considered?
Yeah, I guess, I mean, there's lots of different ways that companies are looking at it. So there's one group that are looking at a way to take the bonds themselves and say to government, we'll handle the whole process. And they're obviously doing it because they want the cash and they want to grow and make a revenue stream. So, you know, that's something that they're looking at. We're focused on it. We're not focused on it to take the money. We're looking at ways that we can make the process more seamless, and we're looking at more from, I guess, you know, ultimately from a listing perspective is generally what we're looking at. But there is a lot of, it's such a big chunk of money, and I think people haven't, you know, governments do rely on it, but I don't think private industry has focused on it till now, and they've only really started focusing on it over the past 12 months. So I don't know the exact detail on how each firm is doing it, but I know that there's quite a lot of companies that are looking at it as a potential opportunity.
So what about protections for investors and also tenants?
Yeah, I mean, that's the thing, like it's complicated, and you know, I've been told about what I can't say exactly what we're planning, but even when they explain it, I've got to get them to explain it in a lot of detail because it does need government approval, it needs state government approval. There's social issues associated with it as well. So yeah, but you'll probably see more and more companies launching over the next 12 months with regards to rent and also with regards to rental bonds.
I can smell the coffee brewing, but we've got time for just one more quick question.
Thanks very much. I'm Heather Shearer from Griffith University. First of all, this morning I looked up to see that I still can't afford to buy in Battery Point, but...
Yeah, it hit $1 million recently.
I have a quick question. I was just wondering if people have any sort of indication or desire to search more deeply, such as like demographics of areas, because Australians are incredibly mobile, as we know, and quite often we will move across country or interstate or whatever. And I was just wondering if people actually want to look at, say, the socioeconomic census type data of an area, which isn't really available on realestate.com.
Yeah, I mean, we do have it there. We've got a neighbourhoods section, so you can go on to that, and we do have census data. I mean, we look... Well, I mean, some of the more interesting data with regards to moving that we look at, we looked recently at where people from each capital city, when they look outside the state, the most popular locations that they look at. And that was quite interesting when we had a look at Melbourne. People in Melbourne, the number one search destination when they're moving outside of Melbourne is Sandy Bay here in Tasmania. When Tasmanians look outside of Tasmania, they go to the Gold Coast, so they're bypassing Melbourne. And then when we have a look at people like, and we can really see Sydney-siders, they don't really identify with Tasmania, but they really identify with the Gold Coast. So, you know, I think the census data is awesome, but I suppose the problem with it is that it is quite outdated by the time that we get it. But we obviously use it, of course. But I mean, what we're focusing more on is kind of that real-time data and trying to get a feel for what people are looking at now and the trends that are happening now to get an understanding of how things are changing across Australia.
Thank you. Please join me in thanking Nerida Conisbee.
Thank you.